Well, howdy there, folks. Welcome into today's video. I've got a few things to speak about. First off, cheers to all fellow Palantir bulls out there. What a day. What a day indeed. Stock's been up anywhere from 25% to about 29% so far today. It's been quite a day. So congrats to all fellow Palantir bulls. Just want to talk about that at the top of this video. Then I want to go ahead and react to a few videos here, okay? The first one up is this Tesla video in regards to Ross Gerber talking about Tesla board of directors. Needs to get rid of several members. So we'll speak about that. Then I want to get into this one. This gentleman rates Alibaba buy. That is a stock I am actively buying right now, so I want to hear what he has to say in regards to that. Then we'll get into this one, Josh Brown selling PayPal stock. Wow, that's a big move to make right before earnings are going to come out tomorrow. So we'll speak about that. By the way, I am going to be live streaming PayPal's earnings tomorrow on Twitch, just so everybody's aware. And we will be not only live streaming the earnings on Twitch, but also the conference call. And then the last one up here, it's another JB video. We'll react to this one. He trimmed his Nvidia stake by 20%. So we'll speak about that, selling stocks, those sorts of things. Appreciate y'all joining me as always. Thanks so much for being here. All I ask in return, smash that like button. Make sure you subscribe to the channel. That's it, okay? If you're looking to join my group of super investors, check out pinned comment down there. That's to apply to join my private stock group with the 6, 7, and 8-figure members in there, okay? Alrighty, guys, let's get into this. Oh, you know what? Let's start out just Palantir real quick here. Am I surprised the stock's up nearly 30% right now? I will say this. I'm a little surprised with nearly 30% move. I was thinking it was going to be a more 15 to 20% move. I was surprised to see about a 30% move. I thought, based upon the U.S. commercial business, the 70% growth number, I thought, okay, we will probably, be up 15, 20% tomorrow, somewhere like that. To be pushing close to 30%, that even took me by surprise. I'm pretty surprised it's that big of a move here today. But yeah, man, a lot of people are very excited about where Palantir is going in 24 and beyond, obviously. Okay, all right, let's get into this.
Tesla and its shareholders. A bombshell report from the Wall Street Journal claiming several current and former members partied and took illegal drugs with the tech mogul, members of the board. Now, you may recall a Delaware judge recently nixed Elon's $55 billion.
First off, would that surprise me? Would that surprise me personally? No, it would not. Sorry, like hearing that to me, I'm like, I could see that happening. Yeah, there's certain things in life you just hear it and you're like, oh yeah, I can see that. There's certain other things you hear in life and you're like, no way that happened. That's shocking. This is one of those things I hear that I'm like, I can see that definitely happening.
A package, in part because of Musk's, quote, extensive ties to the same board that apparently approved his pay. Tesla shares fell over 3% today, down 27% this year, but up over the past year. Let's talk more about this. Musk's relationship with the board, with Tesla investor and CEO of Gerber Kawasaki, Ross Gerber. Ross, first off, who do you think the Journal, they're not going to publish something unless they got good sources, even if they don't name them. Who's leaking all this stuff lately?
Well, there's 80,000 people at Burning Man, so it doesn't take too much to see Elon there partying with everybody. It's kind of like common knowledge. So there's plenty of people that have partied with Elon, so I don't think it's hard to find anybody.
Yeah, but I will say the Google founders, I think, they went to Burning Man. There's been many tech CEOs that have gone to that. Do these reports trouble you as much as they apparently trouble some other people?
There's actually a technology section of Burning Man, if you want to be more specific. And, I'm kind of from the deadhead scene, so I kind of know who does things and doesn't. But that said, the computer chip was invented with the Grateful Dead sitting around, the same area at the same time. So there's a lot of, history of innovation in psychedelics. But that said, it doesn't really trouble me per se as much as it would trouble other institutional shareholders, being a deadhead. But that said, I think it's all about optics, and people want to have confidence in a board of directors in a company. And, hearing about people partying, it was bad enough the time he smoked weed with Joe Rogan was like considered a kind of a big scandal at the time. And we're talking just a hit. of a legal drug. So, it's really hard to get institutions to invest billions of dollars in a company when the CEO sort of admits to be doing psychedelics.
Yeah, and I want to be clear, though. I mean, Musk said, he's got drug tests for these NASA contracts for SpaceX, and he's passed every single one of them. I mean, we have reports of unnamed people, and I saw him maybe doing this with that person, possibly. But we also have passed drug tests, which is that's, at least.
No. The drug tests do not test for ketamine or psychedelics. Drug tests typically test for cocaine and heroin and cannabis and things like that. So psychedelics, those of us who are deadheads know,
But do we care about those?
They don't test for it.
I mean,
they don't test for those drugs.
I mean, ketamine is illegal in certain uses, but it's also prescribed in certain ways.
It's a new thing to be prescribing ketamine and psychedelics to deal with mental and emotional issues. And if that's the case, that Elon...
Oh my gosh. This is a ridiculous conversation. I did not know it was going here. I thought we were going to stick to the stock and the board of directors, and the angle that this conversation has gone is utterly ridiculous, okay? No, first off, let me say this, okay? Really, really important I say this. Tesla's stock price and the movement down has nothing to do with any of these reports and those sorts of things, okay? The Tesla stock is down simply because the earnings were not exciting at all. The conference call was not exciting at all. People are still worried about price cuts, still worried about margins, still worried about Cybertruck ramp and, a Model 2 that we don't even know when we're ever going to get that, right? Some people are talking about the back half of next year, but some people are saying, no, it's going to be more 2026, 2027. So there's nothing to save Tesla in the short term. So that's why Tesla stock has moved down. It has nothing to do with these reports and blah, blah, blah. But man, this conversation has gotten really intriguing.
Has mental and emotional issues that he's been prescribed psychedelics for. That would be another thing that investors want to assess, is the fitness mentally that he has to be CEO. If that's in fact the case, that he's being treated for mental issues. So, quite frankly, this is all just a big distraction from the fact that Tesla needs to execute and sell Cybertrucks and get full self-driving to work. I just put a list of 10 things Tesla needs to do to get their stock going back again, and all of them are execution issues. And so this is, once again, I'm not that concerned about Elon's personal time and whatever. What I'm concerned about is he's not at Tesla building trucks.
Does the board need to be rebuilt? It's only got 8 people on it. 2 are named Musk. It's got his buddy Joe Gebbia, who founded Airbnb, got James Murdoch of the Murdoch News Corp fortune. Do we need to remove some of them, add new people? How? What?
Well, this is the trickiest part for Tesla, because essentially anything the board does, compensation or major decisions, can be challenged now by investors because, Delaware said the board isn't independent. And so it would be false and misleading to imply that they are. So they really need to get rid of 3 or 4 board members and replace them with truly independent board members that have no financial ties to Elon. And the problem with that is that Elon isn't going to want to deal with those people. And I learned this when I ran for the board a year ago. There's no desire from anybody at Tesla or within Elon's circle to have an independent board. Elon controls the company 100%, even though he only owns 13% of the company. But it's going to be very hard for the company to move forward with the current board. And this is, I think, one of the reasons the stock is selling off, is because changes have to be made if there's going to be legally binding things happen. But Elon certainly isn't going to like those changes. So how does this all work itself out? And I think that's the challenge Tesla investors are facing.
Yeah, so, gosh, man, they make everything so much more complicated than it really is. The bottom line is, a few years ago, Tesla was massively overvalued. I was calling that out as a Tesla investor at that time, right? And I took most of my profits in regards to Tesla. The stock was epically overvalued. I knew we were going to have a 2 to 3 year tough run, right? Sure enough, that's exactly what played out. Things are going to get a lot better in the future, okay? Once we get Cybertruck ramped, the price cuts are about done at this point in time. Margins are trough in this quarter. They'll probably be steady the following quarter, and then we'll start to uptick from there. So this big, they try to make it out to be so much bigger than it is. It's a very simple. The stock was very overvalued. It needed to come down. It's going to take a few years to come down. It did that. We're troughing out the margins right now as we speak. Things will start getting right back in the right direction, and that's regardless of the board of directors or if they switch some people out or not. like we're going to head back up. But, you know, I don't know, man. And then if they do switch board of directors, they'll say, oh, that's why the stock's going up. And it's like, dude, it has nothing to do with it. But whatever. Alrighty, next one up here. Alibaba. This gentleman rates it a buy. Here's why.
Like many China stocks, it's been crushed, down 27% this year. Did rise today with the overall market, Jeff, as China's taking desperate measures to try to prop up stocks. Now, Morgan Stanley is watching Baba for any AI, what we just talked about, related news. But the macro China economy is still in question. That was our mystery chart, Jeff, at the top of the show. What is your take on Baba?
My trading take on this, Sully, is that you have to be a buyer here. And the reason why is if you look at how much has gone down, let's look at a 5-year snapshot. And I know Dom was earlier talking about FXI, which is the large cap iShares China ETF, which is up 5% today. But if you look on a 5-year snapshot, the S&P is up nearly 100%. And we're seeing Baba down 55% and FXI down about 42%. So this is a trade. You're seeing valuations very cheap in Baba. And I think China is committed. They've kind of been towing their way into the water. But I think they're committed to move the market higher here. Short term, I think you get a pop in Baba. But this is a risky opportunity. Down 75% off its all-time high when Jack Ma was really, in behind the wheel. But right now, I think Baba is an opportunity to trade.
Okay, there you go.
Down 75% from its all-time high. Not a big deal. And when I say not a big deal, what do I mean by that? Well, how much was Meta down? Peak to trough, over 70%. How much was Netflix down, peak to trough, around the same? How much was Shopify down, peak to trough? Like 80% for Shopify, right? So you start going through these stocks. Tesla, peak to trough. It was about a 70% move, right? Or a little over 70%. So you look at these stocks and, a lot of them have just gotten it. It's just, or certain ones bottomed summer of 2022. Certain ones bottomed very late in 2022. Certain ones, including Tesla, bottomed the very beginning of 2023. And in Alibaba's bottoming very recently here. So, it's not like that's an unheard of number. We just saw many of the biggest tech companies fall that much just in the past couple of years.
All right, next up is Amgen. It's having a big year, already at more than 10%.
Oh, okay, that's all they're going to talk about there? Okay, I thought the whole thing was about Baba. So, I don't really need to get into Baba super in depth. If you watch my video on the main channel, 6 Stocks I'm Buying, February 2024 edition, I spoke about Alibaba in that video extensively, along with the other 5 stocks. So if you want to hear me talk all about Baba and my bullish thesis and everything like that, go watch that video, 6 Stocks I'm Buying, February 2024 edition. Okay. Next one up here, Josh Brown sells PayPal.
Made the case repeatedly. Yep, I'm in Apple, but I'm underweight it. I'm underweight Apple. But now you bought more. Now you may still be underweight.
Yeah.
But why'd you buy more?
I am still underweight, and this is 7% of my benchmark, right? It's 7% of the S&P 500. So I'm never going to be 7% of anything in my portfolio when I only own 30 stocks. So to me, that's just prudent. But I do think that, look, I was bracing for Apple to be horrific. I was bracing for guidance to be terrible, and it actually wasn't.
Well, they guided down a bit.
Yes, but we were expecting that, and I was expecting even worse than what they guided down to. In fact, I thought they guided down 10% in revenues,
it's
which
like
was about in line. But services, they didn't guide down 11%, and that's kind of an exciting part of the story, which we talk about all the time. But overall, the quarter, with as many headwinds as this company has, I mean, you had earnings growth of 12%, EBITDA growth of 16%. You had free cash flow growing 26%. They have $173 billion in cash. They have been buying back stock, and they're going to announce another buyback next quarter, which is what they traditionally do. And I suspect it's going to be another $90 billion. That's 3% of the shares outstanding. So then I look.
Let me attack Apple for a moment. No. Let me stick up for Apple, and then let me attack Apple. Okay. Here, I'll stick up for Apple. Their income statement was a grade A income statement. I graded an A. I looked at that income statement up and down. It was an A. It was a very good income statement. Now, let me attack Apple. Apple, who do they get graded against, right? Who are their peers? Well, Microsoft, Google, Amazon, Meta, right? These are their peers. This is how everybody compares them against, right? And you look at a company like Amazon's numbers, you look at a company like Meta's numbers, you even look at Microsoft numbers, and they're just much more impressive in terms of growth rates than Apple. And so although Apple came through and still reported a very respectable report, if you compare them to their peers, they look like they're doing very poorly right now. And with their guide being where it's at, also looks very poorly compared to their peers as well, okay? And so that's a tough thing with Apple. It's like, hey, you came through, you put up some respectable numbers there, good income statement, but compared to your peers, you're not doing well at all, right? That's a tough part when it comes to Apple.
So then I looked at where numbers came down, and they didn't come down by much, Scott, and the stock is down 6.5% from its highs. So, no, it's not cheap by any means, but I just didn't want to be so underweight because I do still believe in the long-term story, especially once they fix China and iPhones in China, which is 20% of their iPhone sales, and iPhone sales are 50% of the total revenue. So it's material, but they're going to get that fixed. And again, service is going to continue to grow, and then, Vision Pro and all these other things possibly can be nice tailwinds later on. I'm not really counting that much on that, though.
So it's the timing's perfect because CNBC did a poll with Generation Lab, Youth and Money. Apple's the favorite stock investment for young people, according to that poll. Names that you'll find on the list: Amazon's big.
They got a lot to learn, those young people.
Tesla, Microsoft, Google, but Apple stands out from the crowd. There you go. Just to show you here. You want to comment?
Wait. Where's Meta here? Where's Meta? They use Instagram every freaking day and WhatsApp, and yet, oh my gosh.
Yes.
Look, I like the purchase. I'm being a little bit more coy. I'm waiting to see if I can get it at a little bit better price. I'm underweight the name. We all know that.
As your chances passed when there was a 1.6, not a 1.8 on that.
When was it 1.6?
It was 167, 169, not that long ago. Apple?
Yep.
Was I on vacation?
No.
Okay.
No. There was a time, I don't know.
You're talking about when that downgrade came up and it rocketed up.
Yeah,
that was like October.
No, but the chart was ugly.
All right. So look,
and that wasn't that long ago.
Yeah, but all right. I don't think it's been down in 160 land this year. If I'm wrong, I'm wrong.
No. I didn't say this year, but not that long ago.
Look, I don't have a problem with these valuations, whatever it is, 30 times forward earnings on Apple, 35 times forward on Nvidia. These are not like what you saw in 1999 where Cisco was at 100 times, Qualcomm was at 200 times. But I go back to where I was, and I do have a little cash. I'm looking elsewhere. I'm looking in industrials. I'm looking in healthcare, where I think you can find some stocks that are still, ready to bounce out of the malaise of last year. I'm just not that compelled to add to these names here.
So I agree with you. I'm overweight in industrials and financial. And even materials and energy. So I'm there on the value spectrum without a question. And I do think eventually we will see a broadening out. I have been so underweight technology. That's why I'm going to nibble into Apple. And if it does fall back down into 160, which is where it was in October, then
in October, right.
Maybe I'll buy more.
All right, now I almost fell on my chair when I saw this next move because this is just, with the real Stephanie Link, please stand up. You bought Snowflake?
Oh, it's a small position.
Ooh, okay, Snowflake. Hey, by the way, if I was to play healthcare, believe it or not, I think a great play in healthcare, this stock might shock you, is the one right in front of you, Apple. I think Apple's a great healthcare play. I think Apple's going to push way bigger into healthcare over this next 5 years. With Apple Watch and all the innovation, some of the most innovative work Apple's done over the past 5 years has really been in healthcare. And some of the things that the Apple Watch specific is able to do now at this point in time. And so I'm looking at a future with Apple that I think they're going to keep pushing bigger and bigger into healthcare, and that's an industry that needs major disruption. I think Apple's actually got a very good chance at really pushing the future there. I think actually they should be focused more there, in my personal opinion, than actually their VR and AR opportunities, because I think healthcare is way bigger, and I think that's a market that I think their management team is really set up to capture. But anyways.
It's like 50 basis points. It's not in my it's not in my benchmark, but I do think cloud data warehousing is a really big deal. It's a total addressable market of $90 billion. These guys are a leader. They have size, scale. They have a value proposition. They have a whole new product cycle story that's about to come out.
They also have a pretty healthy valuation, no?
They have a healthy valuation, but you're looking at revenues on a CAGR basis between now and the end of the decade, potentially at 30%. I don't have any stock in my positioning, in any industrial, in any energy company, in any financial that is going to grow compound annual growth rate at 30%. And so to me, this stock actually hasn't done all that much in the past year. It's up 33%, had a decent year last year. However, if I believe, and I do, in this concept, in this particular market and their positioning in this market, then I want to have I want to have a small position. It reminds me very much of like Fortinet. I could never really justify the valuation of Fortinet, but the total addressable market is a place, and the concept and their market share is something that I want to be part of. So I will right size it, which I'm right sizing Snowflake. But I
hear you, but you're making
Snowflake. My opinion on Snowflake stock. I mean, obviously the company is very impressive in terms of growth rates they put up over the last number of years. With that being said, growth has started to slow a lot, right? And when you start to have your growth slow substantially, even though it's off of a bigger number, people aren't willing to pay as much of a premium. Now, you saw the forward P, they flashed up there. I believe it was 200 plus on Snowflake right now. That's tough. That's a tough buy at those sorts of forward Ps. And especially when you look at, like, let's say a Palantir that's been in a forward Ps of like 50s and 60s, and people say that's expensive. Then you look at a Snowflake in a forward Ps of 200, it's a tough buy. And so it's one of those, if you're going to buy it, you just have to kind of like buy and hope that the valuation works out long term. And that's a tough investment decision if you're buying like that.
Making a case, I think, more broadly as to why people have been buying growth over value, and a willingness to pay up for the amazing growth prospects that you yourself just laid out, right? That's the whole point.
Yeah, no, I agree with you on that, and that worked last year, but I do think you're going to see a broadening, Scott. I do think the economy is going to stay strong. It may not stay strong like 4%, which is where we're growing right now, but even if it's 2%, that's good enough for mid-single-digit earnings. I think margins are going to be the story, to Shannon's point earlier, and I think earnings are going to be good across the board within the market. And so this year, very much like during COVID, I was trying to do that barbell, a little bit of growth, a little bit of value. I kind of want to do that this year, too, because the opportunities are just too great for the long term in some of the total addressable markets in growth.
I got another move I want to get to in this first segment that we do, Josh, is from you. You sold PayPal. So I think you made it clear in the last couple of weeks you weren't really happy with what happened on that, I can't remember what Investor Day or whatever it was, where the stock was down a lot as the CEO was announcing these new initiatives. Now you've sold out of it completely. Why?
I don't trust these guys. And I also think that the market came into this year hot as a pistol. And I'm just looking at breadth start to turn negative. I'm not sure. Jimmy was talking about things broadening out. It's actually the opposite. We're at 62% of the S&P names are above their 50-day. It was 90% coming into the start of the year. 90 is probably too hot. 60 could very quickly go to 40. I'm looking at the average RSI in the S&P 500 at 53, right at the historic average. So not, anything to be alarmed about, but certainly has room to fall from there as well. So I just think overall, it's probably not the best environment to have your 20th favorite stock going into earnings. And if I'm wrong and they have a great report or they get people excited, I'm willing to miss out. I'm not willing to look at the stock, back in the mid 50s where I first bought in, or worse. And honestly, I think it's going to be a couple of quarters after the fiasco 2 weeks ago before anybody feels really good about the direction here and the new tech initiatives. So I know they're trying hard, no disrespect. It's just not a game I feel like playing today.
Okay. So let me stick up for Josh Brown, and then I'll attack Josh Brown, okay, in regards to this. So to stick up for him, he said it's like his 20th favorite stock or whatever. He doesn't have conviction in it. Fair. You don't have conviction in a position, you got to move on. You got to move on. Otherwise, you're just wasting your time. If you don't have conviction in a stock and you don't really have that belief, you got to move on. So I stick up for him there. Let me attack him a little bit here, okay? So his reasoning is a lot around market breadth. That has nothing to do with really PayPal in the sense of like PayPal's long-term future. So that's more of like a trading aspect, right? So that's looking at it from more of like a trading perspective. Then he says at the beginning, I don't trust these guys. So who don't you trust? Alex Chris? One of the most important executives at Intuit, one of the most loved stocks in the stock market the past 10, 15 years. You don't trust him? And then he, calls the Innovation Day a fiasco. What fiasco? They showed off great concepts on what they're going to execute on this year. I thought that was phenomenal. I don't know what was a fiasco about that. Several of those are very easy to see. Okay, I can see how PayPal's going to, get this done. And a couple were more like, ooh, that's going to be a challenge. But if they do that, that's big. That's like exactly what you look for on an innovation day. Things that you can say solidly they're going to be able to execute on this over the next 12 months, and other things that you're like, dang, man, if they make that work, that's huge. So, I didn't love his reasoning there, but who knows? In the short term, he could always be right? Maybe the stock goes down one last time here on earnings and, back down to the 50s. I don't know. We'll see. I'm going to look at the numbers. I'm probably going to buy more shares if it goes down at all. If it goes up, I'll probably be buying shares. Last one up here, Josh Brown sells Nvidia, 20% of it.
Our top story. And that is Josh Brown. He has trimmed Nvidia by 20%. You sold 20% of your Nvidia position after the open today. I know you're still bullish, obviously, but just take me through this thought process at a time where the conversation is about this too narrow market. It's very top heavy, and names like Nvidia, which was off to the races yet again yesterday as one firm bumped the price target up, I think, to $800. Front and center is this conversation. Tell me about this move.
I mean, we're not even really talking about this, but after doubling last year, more than doubling, this stock went up 40% year to date. And I looked at that upgrade yesterday, and there was absolutely nothing new in there. It was almost just like, I don't know how to describe it. It just feels like there are people who are so bullish they've run out of superlatives and ways to describe NVIDIA's market position and their technology dominance, and they're just like raising price targets. It's almost on a weekly basis. It's become breathless. So this is what I'm describing, by the way, is not science. So let's be very clear. But I'm in the stock for a very long time, Scott, as you're well aware, and I have pretty big gains in it. I want to stay in the position, but it keeps growing in relation to all of my other positions because nothing else is going up that fast. This stock is a 19 bagger just since 2017, and I've trimmed it twice since then, and it continues to trade higher. So I'm not calling a top. I still have most of my position. I have trimmed the stock before. I just felt like the chart went vertical and people have just lost their minds. I'm as excited about generative AI as anyone else, and I'm bullish. I'm just not that bullish where I think a stock should go up, where I think a stock should go up 20% every month just because the alarm clock went off and the sun came up.
Yeah, so the tough thing, what's my opinion on him selling Nvidia there and making that decision, right? And I'm really going to focus on the reasoning behind it. At the end of the day, when you own phenomenal companies that continue to delight you to the upside, and I'm not just talking about stock price, I'm talking about business performance, revenue, margins, I'm talking bottom line, net income. When you own those sorts of companies, a lot of times it makes sense to just let them ride. Don't touch the shares. I learned that with Elf Beauty, right? There was a time when I owned around 10,000 shares of Elf Beauty many years ago, right? And as that stock went up more and more, I took more and more profits, and nowadays I only own 1,000 shares, which 1,000 shares of Elf Beauty is still a lot of shares, right? And I'm up 2,000+% on those shares. But at the end of the day, do I wish I had all 10,000 shares? Of course I do, right? And so that's a lesson. Like, if you've got those great companies that continue to execute, come in and just knock it out of the ballpark, let them ride, man. Those are very special stocks. Those are very special opportunities, and you just let them do what they're going to do. Unless the forward P gets so insane that it's like, okay, I might have to cash. Like Tesla was a good example of that 3 years ago. The forward P got so out of whack. It was like, okay, you look at NVIDIA's forward P, it's not even that crazy. I mean, they were mentioned earlier, forward P of 34? Apple's trading at 30 with hardly any growth. And NVIDIA's growing to the moon right now. Appreciate y'all joining me as always. Much love, folks. If you're looking to join my group of super investors, check out pinned comment down there, 6, 7, 8-figure clubs, and you can join us in there. That is pinned comment down there. Much love and have a great day.